Hi, my name is Rod Khleif, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Rod Khleif, and I am thrilled you're here. And I am super excited at the ladies that I'm interviewing today because they are my friends and they're mentorship students in my Warrior program, and they are such an incredible success story. So when we met, they had 3 properties, and now they have over 380 units across multiple states. They've raised over $8 million for these assets, and they're just a delight to get to know. So I'm super excited to have this interview today. Welcome to the show, Alice and Doris Ng.
Well, thank you so much, Rod. It's a great opportunity to be here. And of course, speaking to you. So you're the one who literally got us inspired into the multifamily real estate. So we really appreciate you.
Yeah, this is going to be a lot of fun today. So why don't you tell the listeners, kind of a little bit about your background, and you'll have to decide who answers my questions. But tell the listeners a little bit about about your background and how you got into real estate and got started, and maybe what the framework was, and maybe what got you excited about real estate. Just a little bit of your journey. So let's start there.
All right. So I guess I can start from there. Both Alice and I have always been entrepreneurs, and we've always realized the power of leverage and being in business for ourselves. So we got started about 15 years ago in the hospitality space, operated, built, ran our own business, conceptualized the whole thing. Recently, we got out of that business and decided to move into active real estate investing full time. During the time that we had our business, we realized that we were working quite a bit, about easily 70 to 100-hour work weeks. And although it was very, very rewarding in terms of financial, and then also leveraging over a team of 60 employees, it was great, but we just didn't feel like there was any legacy going on. Mm-hmm. We would work, we would make money, which is almost like guaranteeing us a job per se.
Mm-hmm. Right.
Halfway through, when we were able to scale down the business, Alice, she's a visionary partner in this business. She thought of this wonderful idea of getting into real estate. And we dabbled into real estate and owned a few single family homes and duplexes, and just really didn't get serious about it because we honestly didn't know. We just know real estate was a good vehicle to retire or to build legacy on, but we didn't know how to do it. So we just jumped right in. Much like you, Rod, we like to shoot, and then we aim later on. So we were just
right. Guys, the operative way to do this is, fire, ready, aim. I'm sorry, ready, aim, fire. And I'm a fire guy. So anyway, I'm sorry I interrupted. Please continue.
We can totally relate, because that's exactly what we did.
Right.
We bought properties at full retail price, thinking that's the way to go. Clearly, about 3-4 years into it, we realized, I don't know. I mean, we weren't making a whole lot of money, and supposedly real estate is the way to go, and we still had to keep our business to sustain everything. Mm-hmm. So about 2 years ago, after we got out of the restaurant business, we we got a chance to attend one of your boot camps out in Chicago. And that was the green light to say, that's how these folks do it. I mean, they could easily grow these units exponentially. They could really leverage off of other people's experience, other people's money. And that's how we're able to build wealth. So immediately in August of 2018, we came back from your seminar, your conference, and we became warriors right away. And then since then, our journey has grown from 7 doors to 384 at this point.
Wow. That's awesome. That's so awesome. So talk about a little bit about, you were already entrepreneurs. So you had your restaurant. Thank God you don't have that now. Good Lord. I feel so sorry for some of these restaurant owners right now. But talk about, did you have to do any mindset shifts to get into real estate? I mean, you're already so driven, but I'm just curious, were there any shifts psychologically at all? Or were you just so driven that you just took action? Just curious.
So yes and no to that, Rod. So like you said, we were entrepreneurs, but however, we did everything incorrectly. What I mean by that, we didn't have the mindset going in as entrepreneurs at all. It wasn't until we got coaching, I think like 4 years into the business, where we actually made money. It didn't make any sense because we would just work and there was no money coming in. But once we were able to get some coaching, we were able to grow the business and turn that around.
Okay.
But same thing with real estate. It was that fear more than anything, that mindset of fear that limited us to start with just single family homes and not jump into larger deals. So.
Okay. So talk about your first larger deal. How big was your first, maybe your first syndication? What was your first syndication? Talk about that.
We got into our first syndication through an LP. I had a friend that we were in a business group together. He sold his business a year before we did and told me that he got into real estate investing and, he's buying these 200-unit apartment complexes. And I said, whatever you're doing, Paul, I'm doing tell me how you're doing it. I need to know. Okay. So this is slightly prior to us meeting you in your boot camp. And
so you invested passively in a deal.
Yeah. Okay. So we said, how it takes. So he taught us a little bit about it. And again, being one of those fire folks first, we just jumped right into as an LP and we read the PPM later kind of thing. We trust you. You've done 5-7 deals already. I think this guy knows what he's doing. So we actually jumped into investing and then learned syndication kind of thing.
Okay.
So, fortunately, he was very, very good about sharing his knowledge. He invited us to the asset. We took advantage of that and learned from him on how to even do any remodel of it. Yeah.
Nice. Wow.
Then we got invited to GP in a syndication. And that one was a fun ride because we learned the logistics as we went. And I didn't know how to do presentations, so I did it.
Did you? So let me slow you down for a minute. Okay, so you did passively first, and you got some education as a result of that passive investment. And guys, those of you listening, that's a fantastic way to get to kind of put a toe in the water with this business and see how it's done. And we've had scores of students invest in our assets and cross invest in other people's assets together. But the nice thing about it is if the operator will do this like we do, we spend a lot of time on education in our investors, is you get a behind the scenes look at what's happening. So that's I just want to flag that's a great way to start. So then you got involved as a GP. Now, what did you bring? Talk about how that happened. What did you bring to the table? Did you bring equity? Did you bring, some other piece of the GP responsibilities? How did you get in that GP?
We did more of the capital raising. It's with our different networks that we've had grown over the years. So that worked out really well for us. When we got into real estate, prior to even syndication, we just shared with everybody we do real estate, and a lot of our friends and family and, just our contacts all wanted to do it. Everybody understands real estate. They just don't know the how part and the when can I execute part. So we came in and said, we're doing it. And they said, let us know, we want to jump in, but I have no time. That's usually the answer to that. So at that point, we just said, everything kind of worked out. We were already aligning people in showing them what we could do in real estate, but we had no deal going. So again, kind of like what you had emphasized in a lot of your boot camps, you got to raise money. You got to talk to these people prior to even.
If they hold still long enough, they better know what it is you do. That's the line I've said thousands of times from stage. Right. Yeah. Okay. Well, good. And so you got a lot of interest. I mean, obviously you've done really well with that. You've raised $8 million. And guys, those of you listening, there are lots of different ways to get into this business. The way they did it was bringing equity to deals. Now know this. They also have to play a role in the general partnership, in the due diligence, the asset management, investor relations, things of that nature, so that you're legal. You can't just raise money for deals, and so they've done that. But the point here is that's a way to backdoor in. Another way to backdoor in, if you're analytical, might be to do the analysis on deals for a group and help with that, or do the asset management, as it were, whatever your superpower is or whatever you think it could be. So there's lots of ways to get into the business. So you got into the GP, you raised equity, and talk how many doors again, and where was it? Tell a little bit more about it.
That one is 251, and that was in North Carolina.
Nice.
And that one was more of an A-class assets. So it's not something we're used to doing, but it was a very easy, I don't like to say the word sell, but it was a very easy sell to investors because most of our investors are entrepreneurs and they can't see beyond the C-class properties. They like to see the nice paint and all of the nice doors that match and everything. So when we did it, it was very, very easy to go ahead and have them jump in on it.
So let's drill down a little bit on raising equity. By the way, guys, these two call themselves Two Savvy Sisters Investments. And I give them crap and I call them Sassy Sisters, but they're Two Savvy Sisters Investments. So talk about how you build these investor relationships and, take us through that a little bit. Let's just go a little deeper if you don't mind.
Sure, I can take that question. Well, it helps that we were in hospitality for over 15 plus years. So starting a conversation with someone and building that relationship, it comes natural, I guess, in that aspect. So investor relationship as a GP partner, that's where we bring in a lot of investor relations just because we're able to do that relationship building. So that is one crucial thing that, thank goodness we were in the hospitality industry, so we're able to do that.
Let me, I'm sorry. I gotta put an exclamation mark on that because guys, so they took advantage of an existing superpower that they already had because, you own a restaurant, people want to know that they know the owner and you're schmoozing the patrons and that's part of that business. That's the successful operators in restaurant businesses know that. So you weren't afraid to go up and start relationships and start conversations. And so you're playing to your strengths. And that's what I want to hammer home. And guys, your strength might be a spreadsheet. Your strength might be, again, relationships like these ladies. But you want to play to your strengths. Anyway, please continue.
Yeah, that was the biggest way for us to literally build and definitely listen more than anything. That's something I've learned in the restaurant world as well. Definitely just ask questions and just listen. You'll always find the need or the answer or whatever it is that the consumer and the investor is looking for, and you'll be able to pick that up for them and be the solution for them.
Nice. Now, when you're talking, let's even go a little deeper, if you don't mind. And I know I'm pushing this, but when you're talking to a potential investor, let's say it's someone that is not family or friends. This is someone that you started a relationship with. Do you have a statement that you make or a way to, how do you get into the conversation about real estate? If you haven't started the conversation that way, what do you say? What do you do? Just really dumb it down a little, even a little further.
Pretty much if we're at an event or I meet someone on a plane, let's say, I would ask them where they're traveling to, kind of get the small talk, in place.
Build rapport.
Build rapport, right?
Mm-hmm.
And the next step is just ask a question, what do you do? And the amazing part about that question is what do you do is people love talking about themselves. And you just listen and then from there just kind of build a rapport. And then normally the conversation would steer as, what do you do? And this is where your opportunity comes in and say you're a real estate investor. So I'm going to role play with you. So you've just listened to me talk and bore you to tears with what I do. So I've just come back and we're sitting on the plane next to each other. Alice, what do you do? Oh, Rod, you know what? I am a real estate investor and I actually focus on apartment buildings. And everybody asks me, well, what do you mean? So I am one of those investors that happen to buy these large apartment complexes that you see all over.
No kidding. And so, and then if they're interested, they will ask questions, correct?
Yeah. Most people are actually interested in real estate, no matter what you say. As long as you say you're a real estate investor, the question will be, well, I always wanted to do that. Or I have a friend that does that. So that starts up a conversation and it takes off on its own.
Love it. So guys, it really is that simple. So stop overthinking it. It really is that simple. Love it. I'm glad I asked you that because you just demystified something for a lot of people, I will tell you.
Right.
So
I just want to add one more thing, Rod,
please.
on that. Usually what really piques their interest is I usually like to tell people, business owners were one of the most creative and the most laziest, hardworking people you'll ever meet. So we like to do the work once and get paid over and over again.
Oh.
And I'm like, okay, so tell me more about how you get paid once. Well, once we
Oh,
and each time they pay rent, you and I get paid. So then that puts a light to them thinking, I can totally relate to this because we all, from what I know, have a mortgage or rent to pay.
I am totally stealing that. I am totally stealing that. That was absolutely awesome. Do the work once and get paid over and over again. I love that. I'm totally stealing that. So let's talk about, so you guys raise equity. What else do you do in the deals? Do you do some of the analysis? Do you do some of the asset management? Do you do the investor? I'm sure you're doing investor relations because you're bringing investors to the deal. Talk about a little bit about some of the other roles that you might play.
Sure. So this year we decided to put our priority in more JV joint venture deals as opposed to syndication, just because of what the market is going through right now. We just wanted to have something a little bit more fast paced when it comes to getting a deal completed. So we're actually okay at looking at smaller units, anything over 100, under 100, that would allow us to go ahead and execute pretty quickly. So
that'll allow what? I'm sorry, I didn't hear the last part. Allow what?
Execute the deal.
Execute quickly. Got it. Okay. What's your target market for these deals?
So right now, if we're the ones initiating the deal, we've been really focused in the Midwest, particularly in Wisconsin. That's where our backyard is. And we know the area, we know lenders, realtors, brokers, and such like that.
Okay.
That works out really well for us. And then we recently are looking into the Minnesota area as well, because we developed a really good partner relationship that has a lot of access to resources over there as well. So we're looking at that.
Fantastic.
We're going to be a little bit more asset management. So we're going to be in the ground. Alice does a lot of the asset. We split our roles completely down. I wouldn't say down the middle, but we're very separate in our roles.
So let's talk about that for a minute. Because that ties into, it partly answers my question. So I want to know, and guys, listen carefully here, okay? Because I'm going to tell you that you're going to get much further faster if you do what they're going to describe right now. It's obvious from their success. You can't both do the same thing. So please talk about what each of you do.
Okay. Matt, you want to start?
Well, I said, Rod, you're completely right. See, we're butting heads where we're trying to do things at the same time we're talking amongst each other, right? So being sisters and business partners, it does come with a challenge because we can't necessarily, delete Doris from family gatherings. So we'll see her. So that has a whole other,
that's a whole nother dynamic. Well, let's leave that off to the side for a minute. Let's just talk about it. Let's say this were a strictly business relationship. As you have to separate that piece. Right. What are you guys? Well, I don't want to put words in your mouth. Tell me what each of you do, and then I'll ask the question.
Sure, we are separated in our roles. We, thank goodness we're giving different gifts, but with a common. That
was going to be my question. Are you playing to your superpowers? So you absolutely are. So yes. Talk about what those are for a minute.
So at the moment, I do a lot more of the operations as far as the asset side of things. So that looks like, repair quotes and the whole gamut. That part
asset management. You're doing the asset management piece. Got it. And that's operations for sure. Okay. And then Doris, what about you? Are you more on the investor side?
Yeah, I'm more of the administrative, and Alice is not a paperwork individual, so I take care of all of that. I work with the lenders. I execute the timeline to get certain things done. I build relationship with the brokers, again, the lenders and the investors. We use the HubSpot platform, so that has helped us out in terms of really keeping in touch with our investor pool. And now that we're growing into our second tier, what I mean by second tier is it's our investors' contacts now that are asking to jump on in. So it's another area we're exploring. We don't have a whole lot of sheets, I guess, to interview. I know you have a lot of those. We just have to execute and apply it. Just again, we're one of
I'm not sure what you're saying. Forgive me. I lost you in that. By the way, guys, we also use HubSpot. I love that platform. We just moved over from Infusionsoft, and we're not even completely integrated because it's a fairly complex, intricate platform for us with all sorts of nuances I won't get into. But talk about what you were just saying because I didn't quite capture it.
Yeah, so I work with the investor side of it, and now we're getting an influx of additional investors, which is our warm leads moving into more like lukewarm investors. And I don't know personally, but that got referred through our immediate investor. So now we're building an extension or growth of our business where we need to have a little bit more paperwork involved.
Oh, you're talking about a questionnaire and all that business. Yeah. That's what you meant by sheets. Got it. And guys, what they're talking about here is to do a 506B, which is the original exemption in the SEC rules around syndication, you have to have a relationship with someone and really know them and have a substantive understanding of their finances. With 506C, of course, you just do accredited investors. That doesn't matter. So you're looking to do 506Bs then, I take it. Yes, Doris?
Mm-hmm.
Yes. So which you can't advertise those, but that's what 80% of the market is that platform. But you have to, one of the best ways to build that substantive relationship includes a questionnaire that they fill out and answer financial questions. Mm-hmm. And it used to be called the 3-touch rule. We had to touch somebody 3 times. It's really more than that now. You really have to have an understanding of their abilities. Mm-hmm. So awesome. Okay. So
I do all of that, and I administer, basically bring it to acquisition. And then mm-hmm. Alice is the or the
ops. Ops, yeah, got it. I love it. That's a fantastic team, and that's a great way to split things up. So talk about any mishaps you had, any noses getting bloodied on this journey of yours, or even any past failures that helped contribute to your success today. Answer that any way you like.
Sure. Our very first investment property, because we just shot, right? And that,
mm-hmm. You fired, you didn't aim, you didn't get ready. It was just like, boom, right.
So our very first property, we like to call it the Starbucks house. And it was a little single family home, super cute. And we thought, oh, great, this will cash flow. And until we ran the numbers correctly and actually learned how to run numbers, we were making on a monthly revenue of $57. And that's split between Doris and I. So we couldn't even afford a cup of Starbucks coffee for a day. Thank goodness the market actually shifted a little bit because we were able to ride it out, and we were able to sell that particular property and recoup the so-called losses. We didn't lose money, but we definitely lost time and energy on it, because making $57 a door and not having our cup of Starbucks did not work for us.
That's funny. That's really funny. So, do you have any favorite stories about this journey so far that you share with people when you're talking to them about this multifamily journey? Do you have any funny or favorite stories? Anything coming to mind?
That was my favorite one, the Starbucks. I wish I would have met you before we had the Starbucks journey, right?
Woulda, coulda, shoulda. I wish I would have met me 20 years ago too, because I'd be on the back of my yacht right now. But, again, woulda, coulda, shoulda. It's all good. So let me ask you this.
I want to add one more thing to
yeah, please.
The story part of it is all the businesses that we get involved in or we end up doing, it's more of a commodity-based business, something that everybody's familiar with, and real estate and restaurants are both industries that everybody knows. Mm-hmm. The reason why we got into restaurant in just a nutshell is because our family has been in that business for such a long time, and it was building legacy for my father, who was in the restaurant business. So now moving on to real estate, building legacy or retirement was one of our areas too. But then we also realized that there was this other set. We had employees that were more of the blue collar, frontline team members, and we realized that during that whole point, a lot of them always asked us for an advance in cash, I guess, just because they can't pay rent.
Right.
So it prompted us when we got into real estate, we only wanted to focus on the working class. We didn't really want to focus on the A class because it's these people that drive the economy that works for me. I need to provide a safe, quality, affordable housing for them so they can actually work comfortably and safely and not feel like they don't have a place to live. So for us, it was a mission to go ahead and provide that housing because we've been directly impacted by these employees of ours that needed this at the homes. And that's why we are generally focused right into taking care of that group.
And I will tell you, I love that. And I know that about you guys. I know you have huge hearts. And anytime, guys, and those of you listening, anytime you come up from a place of serving like that, I don't care what you believe religiously, God, the universe, whatever, power moves to you. And I'm just telling you, that's the way the universe works. And so, and this ties into my next question. You guys are putting this team together. You are leaders. You're each leaders in your own right. What do you think is one of the strongest characteristics a leader should have? And I'd like you each to answer the question individually. What do you think? And I know forgive me, I didn't prepare you for any of these questions, so I'm hitting you cold, but that's okay. I know you can handle it.
Mm-hmm.
Go ahead.
Okay, Doris, go.
Okay. So basically, as a leader, I firmly believe in listening. I think that is probably one of the best traits, and I'm working on that too.
Listening. Yeah.
Being able to just listen to the needs of your team and what they're good at and what they need the help from. I think your success is really driven by the success of your team. It's not really you. You know, what you can execute is great, but what you can really do successfully is through the lens of the success of your team. More so than
Okay. How about you, Alice?
I agree with Doris. When we built the restaurant in particular, honestly, Rod, Doris and I have never cooked a day at the restaurant at all. It was one of those things that we relied all entirely on the team. Like till this day, I still don't know how to make any of the dishes at the restaurant. I know it sounds kind of weird after owning the restaurant for 16 years.
It's okay.
But it was building that team, building and educating that team member, because you're only as strong as your team is.
And so you know how to delegate, you know how to validate, you know how to affirm, how to build up and support. Come say hi. Come here. Somebody's going to say hi to you guys real quick here.
Faces look familiar.
Lean in here. That's Alice and Doris.
Hi, guys.
Hello.
How are you?
Oh, we miss seeing you guys live, right?
I know. You guys too.
She's all cute, ready to go to the gym. I just said, come over here and say hi. All right. Well, so you guys use HubSpot. Are there any other platforms that you're using right now from a tech standpoint?
Yeah, so we use Asana. That's
Oh yeah, so do we. Yeah.
And right now we're running on 2 different projects. We have a 6 unit that we're doing some rehab on, and then we're also in the process of taking over a 10 unit as well. So we have those going on that needs a lot of our attention. And we also use, aside from HubSpot, and then we also use Slack. Slack is what we communicate with.
Those are the 3 we use. That's fantastic. And guys, so Asana is project management software. You can throw everything in there, the pictures, the documents. You can put in, timelines and everyone has access. Just a great way to manage your acquisition funnel. And then even your asset management funnel. It's fantastic. And then of course, Slack minimizes emails. It's inter-office communication. And then HubSpot really is the CRM to communicate with everybody. So, wow, I'm really impressed that you guys were on the same page with that stuff. So if for the people that are listening that have never taken action on this business, what advice would you guys give them? Maybe they bought a house or a duplex. They know they want more. They know their family deserves more. They want freedom. They want financial the financial ability to have freedom. What would you tell them?
I would tell them to attend your boot camp, to be honest, because that's how we got started.
Thank you.
It was without the knowledge would cause us to be stuck. I think that was the biggest thing, because we had a fear of, what if we do the Starbucks house again? What if we only made $57 a month, right? So that was one of the biggest things. Until we took action and actually attended one of your courses, we honestly didn't even know how to go about it.
Okay. Well, thank you for that. And guys, I am having another one, July 25th and 26th, the live stream. So I'll put in a plug for that. Just text Rod Live to 41411 or go to multifamilyvirtualbootcamp.com. We had 900 people at the last one. Now, these were live stream now. They're not live like the Chicago event you guys went to that had, 500 or 600 people. And I miss those. I miss being on stage and the energy, because at the live stream, it was just a camera and my stone-faced videographer, Perry, sorry, but that's the truth. And then my daughter was there. Perry will hear this because he edits these for me. But then my daughter, was there a little bit of the time. But yeah, so it's July 25th and 26th. It's 16 hours. I'm not selling anything. So, you really should come if you have any interest in this business. And thank you for giving me that little opportunity to pitch that. But how about you, Doris?
Get started. One of the challenges, aside from the Starbucks house, is that for us, we don't execute fast enough. We always say, that's a great asset. Let's go ahead and do underwriting. We get halfway in, and then we wait a day or two and it gets sold or something else happens to it. So for us, we've lost a couple of deals. We had a 40 unit that was literally handed to us, that the owner asked us to buy from him. And we said, oh, that's a little bit too much. We've never done bigger acquisition before. I got to just chill out. Let me think. And long enough now, we approaching back to him and asking him, can we buy it? Now he doesn't want to sell it. He just wants to chill out for a little bit. So had we have done that and just took action and find a way to go ahead and get it, he was actually willing to do seller financing, by the way.
Oh, wow. Wow. Ouch. Ouch. Hey, live and learn. You know, that's how we grow. That's how we learn. It's not a failure. It's feedback. You know, it's anytime we have these setbacks, it's feedback, and that's how we become better. So tell me individually, what inspires each of you? Because you guys are so driven, and I don't even know your personal situation. If you're married, if you're, what's up with that? Forgive me for not knowing that. But you guys, tell me what inspires you.
Well, to answer your question, no, we're not married, and we don't have kids. I do have a fur baby.
Okay.
So that keeps me going every day. He wakes me up early enough so I can do my work.
That's awesome.
But really what keeps us inspired is just the fact that we could share this knowledge to other people. Aside from providing great housing to this group that I was telling you earlier, it's more of like when we were in business, we didn't know how to reinvest our money. We worked very hard. We would have $100,000 sitting in our bank account. We never knew about syndication. And that's why for us, it's a mission to educate these entrepreneurs, to let them know that there is a second option to go ahead and make your money work even harder for you, because we didn't know. And now back then we were making not even 1% off this large sum of money, and we didn't really need it. But we wanted to always have it, So now we are on a mission to go ahead and educate these entrepreneurs, letting them know, hey, you run a great business, a very tight ship, but let's go ahead and take your money and put some overtime hours on your money to get those money back over to you in your pocket. So that's been one of our— Love it.
And I'm going to circle back to that in a second, but I want to hear what Alice has to say first.
So what inspires me is we grew up with an immigrant family, kind of like you came to the US, where we watched my parents literally work for the dollar versus having the dollar work for them. And we realized that in the restaurant industry, we were married to the business. So we really didn't have time to date. And if we did, we couldn't find a significant other commit to those crazy hours, right? So that's one reason why we got out of it too. We could move on to the next stage in life. But that was the biggest inspiration, is watching my parents go through that and hearing that we don't have enough money. Like growing up, that was literally what we were brought into. Was like, we never have enough. We never had enough. So that inspired me to like, okay, well, like Doris said, we have to build a legacy versus just like, what are we doing with this money? We could just earn this money, but we're not building any legacy that would take us to the next level. Whatever happens, either we have kids or not, but at least we know that whatever happens after our life on here on planet Earth, we're able to leave something to generate.
Oh, I love it. So thank you. Love that. So back to you for a second, Doris. You're going to educate investors, because obviously that's really education-based marketing as well, to bring investors into your fold and to raise more equity. How are you going to do that? Is there a platform you're going to use? You're going to podcast? Do you guys do a meetup? Is there any other framework that you're going to use to build that reach? I'm just curious.
We just been more involved. We don't have our own podcast per se, and we decided not to do that just because, again, it would draw a bigger reach being a part of others similar to yours. Okay. So we're involved in many different more entrepreneur associations.
Groups. So you go to groups and network and talk shop and do all that. Okay, so that's your vehicle then. Okay.
As a matter of fact, I'm going to put a shameless plug on my sister. She's doing a Badass Women's Summit actually on the 12th tomorrow. She's going to be
tomorrow. This won't go live by then. Darn it. Sorry. This will go live on Monday probably, but it's totally Thursday today. Yeah, but that's okay. But that's awesome that you're going to a women's summit, and that's beautiful. Love it. Okay. Love it.
So we're part of those, and the part is we just take that piece and then educate them that real estate is one funnel that you could go ahead and use to diversify.
Yeah, of course. I mean, most of the savvy operators in the business world use their proceeds from their businesses, invest in real estate, so they don't have any taxes. It's like a no-brainer. Well, this has been a real treat, ladies. I got to tell you, I've really enjoyed this with you guys, and I appreciate you coming on, and I'm so thrilled to play a small part in your lives, and I'm just grateful to know you both. So thank you.
No, thank you, Rod.
Absolutely. All right, we'll talk to you guys later then. Take care.
Thanks, Rod. Bye.
Rod, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. Now, I know you've been hard at work helping our Warrior students do just that using our ACT methodology, which is awareness, close, and transform. Can you explain to the listeners how they can get our help?
You bet. Guys, we've been going nonstop for 3 years, building an amazing community of like-minded people. And our coaching students, which we call our warriors, have had extraordinary results. They've purchased thousands and thousands of units. And last year, we did over 1,000 units with our students. And we're looking to grow this group and take it to the next level. We're looking for people who want to follow a proven framework that's really step by step, and then leverage our systems and network to raise equity, to find and close deals, and to build partnerships nationwide. Now, our warrior community is finding success in any market cycle. So if you're interested in finding out more about how you can become more of our incredible network and take advantage of the incredible opportunities that are coming very soon, apply to work with us at mentorwithrod.com or text CRUSH to 41411. That's mentorwithrod.com or text CRUSH to 41411.